probably not going to get. So that we can show the accounts receivable, what we do is we go ahead and figure this amount, show it as an expense. We call it uncollectible accounts expense. And then we show it as, we can show it several ways. One way we can figure it is, let's look at all the credit sales that we've had during the month, which would be all of them that charged it, and take a certain percentage of that and say, well, that's usually the percent that does not pay. So, again, we base it on past experience or somebody else in the business, get some help from someone. Now, when you see something that they're estimating that 0.8%, how is that expressed in a decimal form? That's right. 0.008. Right? It'd be real tempting to think of how you normally translate your, it's not 80%, it's 0.8, so it has to have an extra zero in front of it when you change it to a decimal. Right. Way over one, right? So that's something wrong with that picture, right?
So then I looked at it again and I'm like,
oh,
0.8,
yeah.
not 80%.
Exactly. Yeah, it's usually low. It's usually less than a 1% that don't pay. If it's more than that, then we're gonna have to look at what our policy for allowing people to charge, who we're letting get extended credit. Might have to change that policy, especially if it was 80%. We wouldn't. We wouldn't be letting any of them charge. Okay. All right. So if net credit sales for the year were $100,000, then we would multiply that out times our 0.008 to get the amount that we're going to allow for uncollectible accounts. And in this case, 0.8% is going to be about $1,050.
800. This is where I ran into a problem.
What am I doing?
The 8% is only 800, but they added 250 from the allowance for doubtful.
Oh, well, then they didn't. Okay, let me look in the book then if that's what they're saying.
How about
It already had a beginning balance in it? Okay, let's look at it then because my slide's not going to show that, of course. What page is that on?
402?
402. Okay. Let's look at that then for sure. It had a balance of $250. 403. Yeah, you right. Right, exactly. So they should have had that on my slide, but it's not on there. But I'm going to put it right now. So somebody tell me. It's going to show. I'm going to move this down. Oh no! I'm too close. There we go. So. $250 balance. Oh, isn't this fun?
Go to the corner.
Okay, hold on. This is just so much fun.
Go to the corner thingy. And use that, yeah.
It's still not, it's not going to let me do it without me putting in the, I can move my
You move your line.
line, yeah, there, but you see, then it has to come down here. There we go. Okay, I'm getting there.
Make it look like that.
Hang on, I'll get it. Ah. There we go. Right? No.
I don't know, looks like a
Accounts
jumble of
receivable. The net, the accounts receivable is 39.50. Is that what I'm wanting to do?
Your allowance, the 32.
Is my allowance 103, 1050? I don't remember what it looked like now. Okay, yeah, that's it. Net needs to be at the bottom. Hang on. I'll get it. 11. Okay. This is fun. Somebody read it to me.
accounts receivable, 32,000.
I'm not getting to the top. Oh, it needs to be a holiday soon. Okay. Golly, Moses.
32,000.
Tomorrow. Okay.
Then it says allowance,
And then
allowance for doubtful accounts.
why is this not happening for me? I know, but I can't see it. It's not letting me see that box, is it? Hang on, guys. Hang on. It's not letting me see the box. It's sticking it in there and not letting me see it. Yeah, it's not even letting me get over there to delete the darn thing. Accounts receivable. Let's see what happens.
32,000.
Yeah, I got that.
Allowance for doubtful accounts.
Oh, I give up. Maybe when I get out of this, it'll.
It has a bracket 800 plus 250.
Okay, I'm just gonna.
And that
Since I put that at the top, I'm just gonna go parentheses what? 1050.
800
And then let's see what happens.
net.
It's not. Okay, I'm gonna have to totally. Okay, here's what I'll do. You can't beat me. This is fun. I'm telling you, it's just fun. Okay, now what?
What happened?
I just.
I was taking my sweater off and I come back, it was blank.
Well, we were doing a little trick. We tricked it. However, the lines were still there. One more time. I left the lines in there. Oh.
It's a great Monday morning.
Isn't it? Let's just do this. Okay. Yeah. Okay, now.
Now it says net accounts receivable. $30,950.
I have, it's hilarious.
What is it? 33
$30,950.
950. Okay. What? Wait for it. Wait for it.
Hallelujah. Say
Hey, I saved that baby. I saved it. Okay. We did it. Okay. Now we got it. Yeah. Now y'all know what's involved in trying to get these things right. Okay, so we had an uncollectible account, right? And that goes in our debit to uncollectible accounts, and we're going to credit our allowance, and then we're going to have a balance in there of the 1,050.
Didn't we talk about that 8%?
it does. It is upside down. I can't fix that. I can't fix that, y'all. Okay. Woo! What is property, plant, and equipment?
Stuff
know
that
what that is?
depreciates, but land doesn't.
Right. It's our lot. Yeah, go ahead, Jimmy. Sorry.
I said that's stuff that has depreciation, except land does not depreciate.
Yes, correct. Absolutely. All the
I
stuff
read
that-
it.
Yeah. You read it, didn't you, girl? All your equipment and your cars and your stuff that can depreciate or lose its value as you use it. Of course, land probably is going to increase in value, but we don't worry about that until way later in accounting. Okay. Okay. Right. Yeah, then. Okay. So we make adjustment for more. We accrue our salaries, and we'll talk about that a little bit, and the payroll taxes and notes, interest on notes payable. Now, I want you to just think about this for a moment. The reason we accrue these is that let's say at the end of the year, let's say we're doing our statements for a year, and if the end of the year, the last payday was on December the 16th, 21st or something weird, but people kept working till the end of the year. But that part that they worked to the end of the year is not showing up in our expenses for this year, right? Because we hadn't paid the payroll yet. Set up that payroll entry like you did in Chapter 10. So what we have to do is go in there and look at the amount that they earned during this accounting period, plus the amount of the payroll taxes on that amount. That would be an expense to the employer. Not the part that you would withhold from them, but just the employer's part of his expenses, the FUTA, the SUTA, his part of FICA, his part of the Social Security, his part of the Medicare, care. All that we would have to go ahead and show as an expense. And it's probably not a whole lot, but in some companies that have huge payrolls, yes it is. So they want it to show up on this year. They need it to lower their income so they pay less taxes. Okay, so that's we're going to go over this a little further, but and then also on any notes payable that we have, we owe this note. Let's say we took out the note in October and 9% interest for October, November, December, January, February, March, for 6 months, let's say. So we have actually incurred interest expense on this for the 3 months that it's been in effect. Right? We owe them because we kept their money. We owe them for the interest that's been incurred for those 3 months. I know it's not until later. We've incurred 3 months worth of interest. So interest has to go on there and expense to us. That part that we've incurred. Right? You see how we're getting way to digging for everything? Also, we've got to adjust